Earnings, earnings, earnings. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all rebounding today as traders digest a flood of first quarter earnings. So let's break down all of those results, starting with Google parent company Alphabet. Alphabet shares falling about 3.5% today after missing Q1 expectations. The tech giant reported earnings of $24.62 per share on $68.01 billion in revenue. That missed analyst expectations on both the top and bottom line. Overall revenue rose 23% year over year, which was a slowdown from 34% growth seen in Q1 of 2021. YouTube advertising revenue came in short of analyst expectations, while Google Cloud revenue did beat estimates and traffic acquisition costs were higher than expected. Alphabet's board also authorized a $70 billion share buyback program for 2022. Next up, we have Microsoft. The stock is rallying more than 6% today after beating expectations across the board. Microsoft reporting adjusted earnings of $2.22 per share on $49.36 billion in revenue. Revenue was up 18% year over year, which was down from the 20% pace of growth in the previous quarter. Sales and marketing costs did also jump 10% year over year, which was the fastest jump seen in 3 years. Microsoft said it benefited from higher prices on some of its Office 365 productivity software subscriptions in the quarter. Next, General Motors shares are also rising slightly today, shaking off weak sales in the first quarter. The automaker reported adjusted earnings of $2.09 per share on $35.98 billion in revenue. That was better than analyst profit expectations, but did miss on revenue. The company hiked its full-year net income forecast to between $9.6 billion and $11.2 billion. Here's a look at those earnings numbers. Apologies for not getting that up. The automaker still plans to produce 25% to 30% more vehicles this year compared to 2021. Now, Chipotle shares are also up after an earnings beat today, trading about 3% higher in this session. The restaurant chain reported adjusted earnings of $5.70 per share on $2.02 billion in revenue. That was better than analyst expectations on the top and bottom line. Same-store sales rose 9% year over year versus Wall Street's expectations for just under 8% growth. Chipotle said higher menu prices helped offset rising costs for beef, avocados, paper, and labor last quarter. The company did not provide full-year guidance, but did say it expects same-store sales growth between 10% and 12% in Q2. Now, Boeing shares are tumbling more than 10% today after reporting a steeper than expected loss in the first quarter. The plane maker reporting a core loss of $2.75 per share on $13.99 billion in revenue. That was worse than analyst expectations on the top and bottom line. Revenue tumbled 8% compared to Q1 of 2021. Boeing said it struggled with production delays during the quarter. The company also announced it's pausing production of its 777X plane through 2023, which will create $1.5 billion in abnormal costs starting this quarter. But Boeing is also ramping up its 737 MAX output to 31 planes a month in Q2 after delivering 95 in total in the 3 months of the first quarter. And Spotify is also plunging nearly 11% today as its subscriber outlook disappointed analysts. The streaming giant reporting earnings of 24 cents per share on $2.99 billion in revenue. That's converted from euros. And that was better than analyst expectations for a profit loss last quarter. Spotify also did have strong subscriber growth in the quarter, with monthly active users surging 19% year over year to 422 million, and that topped the company's own expectations by about 1 million. Premium subscribers rose 15% annually to 182 million. But Spotify said it expects to have just 428 million active users this quarter, which would be an increase of just 6 million, with 187 million premium subscribers. And that forecast was lower than analyst expectations, which is dragging down the stock. Now, besides earnings today, there's also been some new economic data released, so let's go ahead and take a look at that. Pending home sales fell in March as mortgage rates jumped. The National Association of Realtors reporting pending sales fell 1.2% last month. Pending sales represent contracts signed to purchase a home, with those sales expected to then close in 30 to 60 days. This was the fifth straight monthly decline in a row, signaling a possible shift in the housing market. The National Association of Realtors now expects existing home sales to fall 9% this year as the market faces higher mortgage rates. And as buyers are struggling with those high rates, adjustable rate mortgage demand is surging. The Mortgage Bankers Association reported total application volume tumbled 8.3% last week and was down 50% compared to a year ago. Purchase applications, meantime, fell 8% weekly and were down 17% year over year. Refinance applications, though, tumbled 9% weekly and 71% annually. And that drop came as the average 30-year fixed rate jumped to 5.37% last week from 5.2% the week before. That's the highest fixed rate since 2009. And amid those rising rates, demand for adjustable rate mortgages is now climbing. And those mortgages represented 9% of all applications by count last week and 17% based on dollar volume. And the rush of big earnings is not over just yet. Meta platforms, PayPal, Qualcomm, Ford, and Pinterest are some of the highlights that we'll be reporting after hours today. So be sure you're subscribed to my Coffee with Greta newsletter to get all of those details ahead of the market open on Thursday, as well as any earnings that will be released Thursday morning. I'll see you all back here for the Wall Report tomorrow at noon. Give this video a like before you go.